Good morning, everyone, and welcome to the weekend update. This week, I'm going to do things a little bit different. We're going to be just going over what we think could possibly happen in the market this week going into a very contentious election, using what we've learned in past elections and past crises. We do, after all, use charts for a reason, because we use charts to try and tell us what could potentially happen, because as we know, history tends to repeat, and we can see that kind of repetition when we look at the charts. First thing we're going to start off here, this is the Dow 1 hour chart. We come into this week with either a chance of a big up move or a big down move, and of course we ended up having a down move. A lot of headwinds out there, especially with COVID blowing up all over the world and us hitting record cases here in the US. We did get a little bit of a bounce back late on Friday. That could possibly, would not surprise me to see them try and bounce the market Monday into Tuesday into the election, despite the fact that we've got another major lockdown happening in Europe. The UK shut down yesterday for a month. Based on what we saw earlier this year and based on the cases trends we see, we're probably looking at that next big wave hitting the US around Thanksgiving. Whether or not people care here or not, I mean, for some reason no one wants to wear a mask anymore. It's a hassle for them to do it, but that's a whole nother story. We've got a very contentious election coming up right now. If we look at the daily chart, you can see we broke that support line in the middle of the week, but they were able to hold the Dow at the 200-day moving average before bouncing it late Friday. But when you look at this chart, look at all this potential air down here with a possible election that may not be decided for days or weeks unless there is a landslide victory. It doesn't matter who it's for, but if it is close, we could be looking at some serious risk in the market. Quick mention on the QQQ. The tech stocks actually held up, considering pretty well what we were seeing in the other indices, despite the fact that we had big time earnings from a lot of big stocks out there. But you know, it's just too much selling and fear out there right now. The VIX, which I talked about last weekend, we said that if it closed above the 200-day moving average, we would be looking at some pain in the indices, and it did that on Monday. And as you can see, that resulted in that big sell-off here in the market. Now, I was actually really surprised. We've talked about the CPC before. This is the put-call ratio. I don't talk about it too often, but I was actually very surprised when I pulled it up for this video today. I thought it was going to be substantially higher. If you're not familiar with the put-call ratio, it just takes the number of calls and the number of puts in the S&P 500 and comes up with a ratio. Anything 1 is the neutral number. Anything under 1 means the market is rallying. Anything over 1 means the market is selling off. I actually thought I would see this thing up at 120 or 30 based on the selling we saw this week. So this kind of tells me there's still a lot of complacency in the market despite the sell-off and despite the drop in the VIX. And the reason I say that, this is just a multi-year chart of the VIX, and you can see here we're really around the neutral area. We've not had one of those big power spikes up there. 140 plus is usually when it's an extreme sell-off in the market, and then you have these big power spikes up. And likewise, a dip down into the 50s and 60s is usually a time when you go short the market or you raise cash. We're in a neutral zone still right here going into this election is really surprising to me. But you know, we've got some guides to tell us what could potentially happen. And the one I'm going to pull up right here, you can see up here, we are looking at the market back in 2008. We had the economy going into the tank. We had a contentious election, and you can see what happened into that election. 25% sell-off over the course of 2 weeks. The other, of course, thing we've got to look at, back in 2000 when we had the Bush-Gore fiasco with the Supreme Court deciding who the president was going to be, there is a strong possibility of that happening again for this election. You can see even there, the market was on a tear going into this election. Now, in the week after, when they were trying to count the ballots and figure out what was going on, the Dow ended up losing about 700 points, but that's when it was down at 11K. Considering where we are right now, that's equivalent to like 1600 point sell-off. So we have got history showing us that the market does not like these kinds of elections and tends to move to the downside. Put call ratio. This was the put call ratio back in 2008. Going into the election, we went from 94 to 133 and ended up going up as high as 140. That can tell you the kind of craziness that can happen in the market going into an election. The VIX, this is a multi-year chart of the VIX, and you can see we're right possibly going up and nowhere near what that spike high was earlier. So what is my point in talking about all these charts? There is a reason we've been taking half days for the last few days that were high cash, 90 to 100% for some guys, small swings, and just sitting back and playing the flavor of the day. You don't get a medal for being a hero in an uncertain market like this. Let's see what happens election night. If we've got a clear-cut winner, there will be a big relief bounce in the market. It does not matter who wins. If we get such a result, we'll be able to pivot to the sectors that will do well under each candidate. So that's where we're standing going into this week. The only stocks I'm actually going to mention that look interesting right now, this is a better chart. ITP, toilet paper stock, Chinese toilet paper stock has been on fire. You may laugh, but the hoarding has begun. You're starting to see headlines of the same things that got hoarded earlier in the year are now starting to run out again. That's been an angle for this stock to do very well over the last few days. But the one that really is a play for this week is DGLY. Digital Alley always does well in these uncertain times. This is the 1 hour chart. You can see it's got very strong support around the 220 level. Anything in the 220s looks like it's an excellent pickup, at least for the next few days, depending on who wins. If we've got a contentious election and no clear-cut winner, we're going to see this market or this stock do very well. If we see the president get reelected, we're going to see a lot of complaining and writing about that. Here's the daily chart. You can see it's a nice setup for a play. Now, again, these are not stocks that you play large. These are small plays. DGLY has a habit of throwing offerings out of the blue. And even in this kind of market, there's going to be ample time to profit from whatever scenario happens. We're just waiting and getting ready for whatever the scenario that appears this week. So that's it for the video, guys. Don't be in a rush to buy over the next couple of days. And when you do buy, consider playing small. The market where you will make big money, this is not it right now. Let the things decide themselves. And then when the time is right, it'll be time to press. So have a great weekend, and I will see you all in the chat room tomorrow. Bye.